This is loss adjustment early intervene agent. So in the claim operations, the loss adjustment expenses don't suddenly spike. They increase when the actions are delayed, the vendor engagement happens early, and the workload slows the response time. So this agent will identify such early signals in the active claims and recommends the timely intervention to prevent the cost escalation before it becomes the unmanageable. So let us test the agent. Here I ask the agent to show the claims high uh, with the high expense in the early stages, that is the with the rising cost signals. So these are some active claims showing the early cost pressure signals. So we can see the rising expenses combined with some duration, then some risk flag and the workload level, and they already suggested the actions like the cost containment and supervisor review. So the agent highlight these cases early and then enabling the teams to act before the expenses escalate further. So here I ask the agent to show the high risk claims or the claims which are engaged early and why the action is needed for this. So these claims are flagged as the high risk claim and uh, a high risk flame with the significant expense exposure timeline breach. So along with the action, the agent explains that why intervention is needed. So highlighting the key drivers like early vendor engagement, then delays, and then increasing workload. So this helps the supervisors to take the quick informed decision to control the cost. So why the action is needed? Why the action is needed? Because the early vendor engagement is combined with the timeline breaches, then the high workload and the rising expenses is driving the LAA escalation. So the immediate controls will help to prevent the further cost leakage and handling the delays. So instead of reacting after the cost rise, the team can act at the right moment, improving the efficiency and reducing the unnecessary expenses.